Hello and welcome all to the Fintech Finance Virtual Arena, where you're joining us today in these very, very strange times. Joining me today all the way from Australia is Joseph Healy from Judo Bank. How are you doing today, Joe?
Great, Ali. It's great to be speaking to you. Things are starting to chill out a little bit here in terms of the restrictions that have been placed on by government. As you may well know, the fatalities in Australia have not yet reached 100, about 97, which are all very sad, of course, but nothing compared to what I read about the UK, US, and other parts of the world. So we're feeling that we've got through, touch wood, the major part of this crisis, and hopefully we'll see the economy and small businesses in particular starting that journey back to whatever the new normal might look like.
I think you mentioned last time we spoke that Australia is the lucky country.
Well, it has the reputation for being the lucky country, and certainly, based on the evidence of the COVID virus, it together with New Zealand have come through this remarkably well relative to so many other countries. So that lucky country reputation, of course, has meant that Australia has basically gone about 30 years without any form of recession. Now we're going to face into a recession now, but hopefully it's going to be a relatively mild and more of a V-shaped recovery than might otherwise have been the case. So that lucky country reputation has stood the test of time.
Absolutely. Well, we for our Fintech magazine, always got a plug. We've obviously got a bit of a profile on you guys when we spoke last week, and on the subject of sort of lucky countries. Since then, there's been a bit of news from you guys this week, and it seems to be all of the big news of this nature seems to be coming from Australia. So what happened last week with you guys?
Well, we raised at Judo Bank. We raised our third round of equity. We raised $230 million, and we were thrilled by that, because obviously doing a capital raise in these market conditions, it was hugely challenging, and we were able to get raise the money at a premium to the money that we raised in July last year, which was very pleasing actually. And so that means that over the course of the last 2 years, so just under 2 years, we've raised just over $770 million of equity. I think pounds-wise, that would be about 370 million pounds, thereabouts. I think the exchange rate's getting close to 50 cents to a pound. So we're thrilled. Great capital raising, great investor base, all blue chip names. So it really means that from a capital perspective, that Judo has enough equity capital for the next couple of years, really, to continue the growth journey that we are very firmly on.
Absolutely. Well, we talked a lot on the phone, obviously, about the culture at Judo and that can-do attitude, and obviously the fundraising in this time kind of reflects that.
Yep. Well, we have this. Whilst never wanting to downplay the serious nature of the conditions that we're all living in, we adopted the mantra that let's not waste a crisis. Out of these difficult times, with the right kind of mindset, there's always business opportunity there, and that was definitely the way we thought about the investor, going back to our investors. But having a culture that has a very can-do mindset is critical, because otherwise your ability to grow your business in a market that's dominated in the traditional model is dominated by giants with significant muscle, significant spending power. To make any impression in the market, you've got to be optimistic, you've got to be ambitious, and you've got to believe that you can do what you set out to do, and knowing that along the way, not everything's going to go to plan, but unwavering in your approach to the plan that you've laid out, adapting things from time to time, to deal with obstacles. But one of the things that people talk about Judo, people that we talked to about 4 years ago when we were starting on our first exploration of the investor market, about the interest in backing a new business like Judo, when we still speak to those investors in London, in New York, in Hong Kong, Singapore, and here in Melbourne and Sydney, people say to us in a very complimentary manner that the strategic narrative, and the raison d'etre behind Judo that we articulated 4 years ago is unchanged today. So we've not chopped and changed our story. We spent a great deal of time thinking about why would a business like Judo be needed in the market? How could it survive? And then how could it succeed? And our strategic narrative today is exactly the same one it was 4 years ago. And that's something I'm pleased about, because too often new businesses start with an idea, they develop a business plan, and then, a year or so later, it changes quite dramatically. And then, and sometimes I think that can be quite disconcerting from an investor point of view. There's a lot to be said about consistency of your strategic narrative and consistency in your pursuit and execution of a vision that you clearly mapped out in all its dimensions. And when people see you doing that, they get an enormous amount of confidence. And certainly when we were raising this last round of capital that we announced last week, the one thing that investors who came into that round said, look, you guys are doing exactly what you said you will do. You've the consistency in execution, this consistency in vision, the consistency in the purpose behind the company has been undiminished from way back 4 years ago. So quite often in a world where we're thinking about innovation, which is critical to any new business success, and technology changes a lot, so you can't say 4 years ago that we wanted our technological platform to look like this. But what you can say is that the core values and principles that you want your technology and the role of technology inside the company to perform, and you can outline those, knowing that innovation, that changes and new technologies come on stream, but the core principles and the role that you want technology to play should not change. It should not change in the way you're building your company. And in Judo sense, we said that we wanted to build a high-tech and a high-touch company. We wanted a customer-facing human dimension to the way we engage with our business customers, but we wanted that to be enabled by leading cutting-edge technology, cloud-based technology, and so that when people came to do business with us, it was easy for them to do business with us, and it's easy for our people to do business with our customers. And I think if you were looking and thinking about technology and your operating model, sometimes tried and tested truisms hold up as the guiding philosophy, and our guiding philosophy is easy to do business with.
Absolutely. I think I even mentioned it to you last time. You sound very similar to, because obviously I know you're on a T24 stack. George, who I don't think he's much to do with the day-to-day running of Temenos at the moment, but he echoes that sentiment every time we've got him on camera.
Right.
With that in mind, it's obviously there's a bit of a overarching trend of a lot of new banks at the moment where they're being assessed based on the amount of fundraising that they achieve and the evaluation of that, even if their revenues aren't particularly massive. What's the what's your roadmap to profitability? What's your roadmap to the point where you actually you become the investor as opposed to seeking investment?
Well, we turn profitable in June, so a month from now. And that's even assuming, obviously, we've been active in the market for about slightly under 2 years as a lending bank, and then we started collecting deposits in August last year. And obviously, with a lending book that's getting close to $2 billion in the environment that we are in, we've had a handful of bad debts that we had not assumed about 6 months ago, but all reasonable and all within our capability financially to absorb. But notwithstanding that, we'll turn profitable in next month in June, and then the whole profit curve then starts to get to a very steep trajectory going out into the future. Now we're turning profitable after about 22 months of lending, but in the first 10 months, it was very low amount of activity. It really has stepped up since about 12 months ago when we got our banking license, actually. So we're profitable probably, it's about 2 months later than we thought we would be, but 2 months in the overall scheme of things is not a big deal. And in the way we modeled the business right back when we were first raising capital, we said that we'd get to profitability when our lending book got to about 1.6, 1.7 billion, and we had 90% of our lending funded by retail deposits, and that's pretty much where we are today. So it'll be interesting, having worked for 2 years and having been planning this for 4 years, turning profitable is quite a milestone.
It's interesting you mentioned that about the handful of bad debts, because in the UK we have Oak North, and it became a story that they had their first default, their first bad debt, and the fact that became a story just boggles my mind, because if that was any other established bank, it wouldn't be a story. But because it's a new bank and it was their first one after years of trading, which is incredible, I imagine it's quite similar to you guys. Why is that? Why are you able to keep that figure so low whilst at the same time focusing on the experience?
Yeah, well, the first thing I'm doing now is touching wood, because obviously we're not out of this whole crisis. But we're lucky that our loan book is a relatively fresh loan book. I mean, it's not like a major bank that might have had loans sitting on its books for 5, 10, 15 years. I mean, the vast majority of the lending that we've done has been done in the last 12 months. I think 87% of all our lending has been done in the last 12 months. So the credit analysis and is still fresh rather than being dated. And we stayed very close to our customers. So as soon as we started seeing the onslaught of this crisis, we had our bankers on the telephone and then on webinar, speaking to our customers, making sure that they were across the risks in the business, reassuring them of our support, that they shouldn't panic. The key is that they take a realistic assessment of conditions and take a 6-month view, assume that in many businesses there'll be no revenue for the next 6 months. But what are the plans that they have for making sure that the business survives through that 6-month window and then comes back out of that not substantially weaker than when we went into this crisis. So I think that constant contact with the customer has been a big part of the success so far. But I've been in banking 30 odd years, and the one thing that I keep reminding bankers, that we are fundamentally in the business of managing risk, and you assess your risk in the expectation that some things will go wrong. And the key is to make sure that when loans do go wrong, that as a percentage of the portfolio, they sit within a very sensible range, and therefore you're not surprised by the emergence of some credit losses. It's the nature of the business. And so as things sit, where we are is very much in line with our expectations. And of course, the investors that came into the company last week wouldn't have put new money into the company if they felt that there was the risk of too much bad debts. But we're confident that we are well set up to manage through this. I'm sure there'll be a few more customers that will get into difficulty, and there'll be a few of those customers that we'll lose money on. But in the overall scheme of things, it's well within our expectations.
Absolutely. Looking at kind of your customers as a whole, and generally speaking, there's a feeling that, particularly on the SME side of things, they are underserved by the banks. Where else do you think that they are underserved in terms of kind of a product offering? Where else do you think there is kind of a gap possibly for Judo to expand into?
Oh, I think in my mind, there is no question that the major banks, and I'd say this to be true of the UK too, have taken small to mid-sized businesses for granted over a number of years. Now, we've started focusing on lending because we saw in the Australian context, there was a gap, that is demand not met by the system, of about $90 billion. So call it 45 billion pounds. And the SMEs were basically being offered a one-size-takes-all proposition from the banks. There was no innovation. It was very automated, so there was no judgment being applied. And so our first thing was to demonstrate that we could grow our business by lending. The second thing then was to say, and we can help fund that lending through business and retail deposits, which we've done. We're about 90% loan to deposit funded. Now, the next thing is looking at the other broad range of products. So if you think about foreign exchange and interest rate risk management, but foreign exchange in particular, the banks make excessive levels of profitability in foreign exchange when it comes to dealing with small businesses and dealing with people like you and I. I mean, the rates that they charge and the margins they make and the return on capital is eye-watering. So we want to bring some real competition into the foreign exchange market. We also want to look at credit cards because, again, banks make excessive levels of profits on credit cards. And then in the whole payments industry, moving money around the system, facilitating the smooth flow and transmission of money is a highly profitable business for the banks. And we think that small businesses have been taken for granted. They don't see the innovation that is available in the market. And we want to address that as well. So our plans in terms of product development are extensive. For us, the key was getting the Temenos technology platform well and truly entrenched, deep roots inside the company, and then we could start developing a whole range of product suite, largely using that platform. So there's a huge scope. I mean, the profitability that the banks make from small, mid-sized businesses is excessive in the UK as it is here in Australia, and we believe that we can build a very profitable business by bringing more competition, by giving small, mid-sized businesses a much better deal than they're being offered, and forcing the banks to kind of sharpen their pencil and offer better terms and conditions, better rates to small businesses. So the opportunity is huge. It's huge, and I believe that this key to unlocking that opportunity is going to be innovative new players, whether it's pure fintech type models, or neobanks, or more challenger bank, traditional based challenger banks. They can transform this industry. They all share a common goal, and that is to disrupt the status quo, the excessive profits and poor service that the traditional banking system has earned and enjoyed, and making a difference. And innovation will be critical to product development in that regard. And we will partner with some people. I don't see us doing all of this stuff on our own. We'll be looking for partners that bring certain capabilities that we would find it difficult to replicate, but could partner with them in a complementary manner. And those partnerships, incidentally, do not need to be confined to businesses that are currently based in Australia. I mean, I and my colleagues go to London 2 or 3 times a year to stay in touch with the the so-called ecosystem, the innovation, the impressive innovation that is evident in the London market in particular, and we'll look to partner with people that can bring something to our business and allow them, of course, access to new markets. And I very much see this as a very global industry. I don't see it as a national industry in terms of capabilities to work together.
Absolutely. I think this current pandemic is in many ways kind of highlighted that a bit.
100%.
We as a business, we bank with Starling, and one of my favourite features of it is the marketplace, is the integration with the likes of, it's the integration with Xero. I mean, that is, everyone should partner with Xero, and that ecosystem definitely is the way forward, because with all the best one in the world, Starling would not be able to, like that, create the same kind of platform that Xero has.
Correct, and nor should they. I mean, I think working with other players in the industry where they bring complementary capabilities, it's a win-win for both institutions. And you know, I feel that's going to be a very important part of our success into the future, is finding several strategic partnerships that will help propel our business, but also help meet unmet customer needs, and also help the joint venture partner or the partner that we're dealing with. The prize is big enough, and the success of many businesses will be their ability to find cooperative relationships with other players.
Can you guys see my train track? I'll come and have a look at your train track in just a bit. Okay, you run downstairs. I'll be right back. I'll be right there. I'll come down in a second.
Lovely. I think I saw something equivalent to this on the BBC about a year ago. This professor in South Korea was being interviewed by the BBC, and one of his kids ran into the room, and he remained remarkably composed. Do you remember that?
I do. It was incredible. We had an internal video. He did the same thing, and the background fell down, and my wife was getting dressed. The last thing I want to touch on, and I don't think I've asked this before, but what's in the name?
Judo, right? Well, when we developed the business case, we had a consultant friend of ours review the case, and we asked him to challenge it, make sure that it was a rigorous and a well thought through plan. And he came back and he said, "Well, what you've written is a judo strategy." And I said, "Well, what's a judo strategy?" There is, if you Google judo strategy, there is academic literature on this. Judo strategy is the strategy of a new player coming into a market dominated by giants, big, cumbersome looking players, and using agility, speed to take on those giants, and to do so in the art of judo by trying to topple them, making sure, of course, that they don't fall on top of you. So there are 7 principles to a judo strategy, and when we looked at the judo strategy's principles and we looked at what our strategy was, they were almost identical, in different words, but identical to the philosophy of the bank that we wanted to build. So we thought, well, let's call it Judo Bank, as it reflects the judo strategy. And I do encourage listeners to Google up judo strategy, because there is a lot of material written on it, but it does neatly and accurately reflect the strategy that we've adopted in coming into this banking market.
Now, obviously in the UK, RBS spent 100+ million creating Bo, because they weren't able to acquire Monzo. What would the reaction be for a Westpac or someone knocking on your door and saying, "We want to acquire you guys," and then maybe start their own if you say no?
Well, let me deal with the second part of that question first. I think that it's very hard for large bureaucratic organizations, the banks are, to truly innovate on a sustainable basis. And I, in my career, I've been involved in several efforts to launch in-house venture capital businesses, to develop new things. But at the end of the day, the complexity and the competition for capital and the short relatively short career span of many executives means that the patience and the enthusiasm and resources needed and the entrepreneurialism, which does not exist inside large banks, needed to make these things successful, represent serious barriers to success for them. Therefore, the idea of going and trying to buy somebody is an obvious way of solving for that inability to create it yourself. The problem for the company that they might be seeking to buy is that history says that if you're consumed by a large organization, you're given all sorts of promises and commitment about being left alone, but they rarely last more than 1 year. Again, people change. The person that you got on with, who you trusted inside the large bank, is either leaves or is promoted somewhere else, and you've got a new person who doesn't share the same enthusiasm or vision. You start getting hit with lots of costs that don't belong to your business. You get compliance and regulatory and bureaucracy, and eventually they end up really damaging or killing the business that they bought. So I personally, given how passionate I and my colleagues are about Judo, and our strong belief that we can build a world-class SME bank that over time represents a huge legacy for the team that built that bank, I personally would consider it as close to a nightmare as you can ever imagine a nightmare would be if we ended up being acquired by a large bank. Now, the other side of me says, well, if they pay a big price, you can make a lot of money. But frankly, money is important to some people, not to everybody. I think building something that stands the test of time and is part of changing an industry is a much bigger prize than the short-term hit of getting, a couple of $1 million or whatever that sum might be. Now, I'm not speaking for everybody when I say that. Yeah. I'm talking personally. But if you're doing this to make money, it's the wrong reason. If you're building a business, my advice to people coming into the finance sector is to be really clear about the purpose that you serve. Be really clear about your differentiation and how sustainable that differentiation is. Be really clear about how big this business can be. Don't think of it, if you think of a small business, it'll become a self-fulfilling prophecy. You should be thinking about a big business. And also then say, and why am I, at whatever stage in your career you're at, taking the risk of investing my time and my enthusiasm and my expertise in trying to make something like this work, knowing that the risks of failure can be quite high. And then say to yourself, if my passion and purpose and nature of my competitive advantage and my personal risk appetite are all where they should be for a business like this, and I can attract a talented team that are equally passionate, then the money will look after itself. And so in the pecking order of what's the most important reason for building a new business, money should not be in the top 3, 4, or 5. Passion and a strong sense of purpose should represent 1 or 2.